Hello, guys. So we are now in Dubai at World Blockchain Summit. I'm here with you, Anna Tutova, co-founder of Coins Telegram, and our guest, Perianne Boring, who is the founder and CEO of the Digital Chamber of Commerce, and it's the biggest trade organization which promotes and advances blockchain technology. And well, she's often in Washington and speaks with regulators there and try to finally get the right regulations. And additionally, Perianne is recognized by Forbes as top 50 women in tech. So great to have you here, Perianne.
Thank you, and I'm happy to be here.
So I know you mentioned that you got to know about Bitcoin so early back in 2011. So can you tell more about your story of getting involved in the industry?
Yeah, so my background's in economic policy, and I learned about Bitcoin when I was working on Capitol Hill in the U.S. House of Representatives in around 2011 timeframe. The industry looked very, very different than what it does today, but as somebody working in economic policy, learning about this internet or virtual currency that was not created or run or controlled by the central banks was really just like a fascinating concept, and I wanted to understand it more. So I followed the space very closely for a number of years. And I eventually came to the conclusion that some of the biggest issues the financial and the monetary system are facing, Bitcoin can be an amazing tool to address some of those risks. So now I work as an advocate for this technology and want to bring this technology to the people of the world.
So did you find it just on the internet when you were making your research on something else?
I actually had a friend that introduced it to me who just
Oh,
they had
really?
found it and they were pioneers in and of themselves and said, "Hey, I think you would be interested in this." So I had a friend show it to me very very early days.
That's cool. And did you get straight away the idea of Bitcoin, the value of Bitcoin, or did it take time for you to understand?
Well, I mean, I understood this is a virtual currency, so I mean, I got that concept, but I mean, I think I'm still learning about what is the value of this technology and how is it going to be integrated into business and our daily lives, the different communities around the world. I think we always should continuously be learning. But it's kind of interesting, Bitcoin. We're now 15 years into this experiment. 13 out of the past 15 years, or 12 out of the past 15 years, Bitcoin has been the best performing asset class you could invest in.
Yeah.
But when I first learned about Bitcoin, I didn't think of it as, oh, this is going to be a great investment. I'm going to make a lot of money.
So you didn't invest back then?
Well, I was working for the government, so I only had like $5, so I wasn't necessarily buying like a lot of coin back then. But I really saw it as an alternative monetary system. That's really the value that I thought was interesting about it, and that's how I still see it. I think it's if the monetary system isn't serving you, or if you are subjected to inflation, like I am in the United States, we have extremely high inflation rates right now, and you just want to make sure that your savings and your hard-earned money is protected over time. That this is a technology that can protect you from inflation, and so that's where I really see as one of the most important uses of the technology, not necessarily the speculative asset to make a bunch of money on.
And I know you as well know a TV host on RT, and we were talking back then, quite early, back in 2013, 2014, about crypto. So, did you should you have through any approvals to talk about that? And how was this back then?
Yeah, so I worked for RT America, so the American affiliate of RT. It was a really interesting experience. I was recruited to work there. My background's in public policy. I've always been very critical of the central economic system, so I think that resonated with the RT team of producers. But I hosted a show called Prime Interest. We were live every day in 40 countries around the world. So we were right out of the DC bureau, but on the international channel. And we really covered alternative financial topics, so like a very wide variety of just alternative things that you may not see on the mainstream media, at least the mainstream in the United States. RT, as you know, from Ukraine, because I know they're probably more recognized there than back in my home state of the U.S., is the second largest news network in the world behind the BBC. So it really was an incredible opportunity to get to work at a network like that. But the biggest opportunity that it gave me was the opportunity to cover Bitcoin in 2013. And that was really one of the most impactful years for Bitcoin. And I was one of the first international journalists in the world, at least broadcast journalists on TV, covering Bitcoin. So I went to the very first Bitcoin conference ever held in the world. That was in San Jose, California. I covered a lot of the very early Bitcoin news stories. So some of the earliest companies to raise funding, like
What achievements did you make there?
What's that?
Like what early Bitcoin investors or founders?
Yeah, so
Bitcoin conference.
Yeah, I reported on blockchain.info's Series A. I reported on Bitco's Series A. Um, I the Charlie Shrem. So when I was at the very first Bitcoin conference, Charlie Shrem was there with the Winklevoss twins. They had announced their investment. I'm trying to remember the name of the exchange. The exchange is no more. They ended up going going under. Um, but then some of the other big stories were Silk Road and Mt. Gox. So it was really interesting as someone who had actually been covering the space for a long time. Mainstream media is not covering Bitcoin at all. Seeing Mt. Gox happen, it's like, okay, this exchange went down. They've lost a lot of customers. Coins is obviously not a good thing, but a lot of the stories in the mainstream media were Bitcoin had died, which I'm like, what? How is this? They just gotten it so wrong. Um, so and then you had Silk Road again. So another very bad kind of PR moment for the industry, where it was just all over international headlines that Silk Road, billions of dollars of transactions of illicit drugs being sold with cryptocurrency, and so everyone just thought, because of Silk Road and how much news coverage it had gotten and the way that the mainstream media had portrayed that event, that Bitcoin was just a currency for criminals. So after seeing so many really exciting things like Cypress bailout and people buying Bitcoin, to all these really small companies raising real money to build interesting things for Bitcoin, venture coming into this space, and then seeing Silk Road and Mt. Gox, where it was like bad story after bad story, and then what happened next was this regulatory response. So the state of New York came out and said, we're going to regulate this space, and they started their effort after what happened at Mt. Gox. And then there were 3 hearings on Capitol Hill that year, really looking at Bitcoin's use in criminal enterprises and what should we do about that. And as really a policy person, it became extremely evident to me that this industry, this technology, needed to have experts on the ground in Washington that can work with public policymakers to help them understand what's happening and help guide policy and regulation. So after leaving RT, I started focusing on that, and that's what I've been doing the past 10 years.
Yeah, so you started digital entrepreneurs back in 2015, then earlier. So what challenges have you faced in those first years?
Well, there's been a lot of challenges. I would say the mainstream, coverage of the technology has not served us very well. There's a lot of stories that end up shaping conversations with policymakers and regulators that are just not helpful. Education is a massive challenge, and still today, you have people serving in federal office with absolutely no idea how this technology works. And you can't really have a conversation about how do we regulate this in the right way if you don't even understand the basics of the technology. So education continues to be an issue, and I'll tell you one funny story. I was meeting with a Senate office. I was meeting with the staff of a U.S. senator, and talking about some of the issues we have. And the guy just said, he just kind of stopped the meeting, and he was like, "Ma'am, my boss doesn't even send his own emails. Like he doesn't know how to send emails. Like he has, we like basically saying like you need to like reset your expectations because we're a long ways away from understanding anything you guys are advocating for." So that education is really important, but where we've seen a big change in public policy just in the past couple of years is it's become very political. So I very much see this, it's technology. It's about innovation, jobs, technological progress. How is this technology going to impact different areas of business? How do we regulate it in a responsible way? Like that's the conversation we should be having. But too often we're having political conversations where you have people with a political agenda who either want to apply that agenda to our space, and that has extremely large risk because there's no education or data or information or your party has just said we're anti-crypto. There's nothing you can do to change that. It makes it extremely frustrating for those who are fighting to advocate to make this technology available to people around the world.
And now everybody says that US became like the most place for crypto, but obviously the best companies are usually based out of the US, and you're based there as well. Can you tell about the current state and how do you see other jurisdictions now? You're here in Middle East, in UAE, which is well super crypto friendly. Asia is as well quite progressive. Europe is MiCA, so like what US should learn from these other jurisdictions and what state of the situation do you see in the US now?
Yeah, it is disheartening that we're here, we're outside of my homeland, we're in the Middle East, and this is where we're conducting business today and this week. The U.S. really has dropped the ball in a major way, and I believe it's because of political reasons. You can't apply any logic or common sense to how we've gotten to where we are. Just politically, we've made some significant missteps on how we're going to handle and embrace this technology in the United States. Today, the biggest challenge that business have is just basic regulatory certainty. So the government has not provided clarity on how different types of virtual asset services and businesses are going to be regulated. And then you compound that with we have a very aggressive Securities and Exchange Commission that's regulating through enforcement. So there's a political agenda to make this technology non-available. They don't want it to exist. They don't believe we have a right to exist. And that's extremely sad, especially in the center of what's supposed to be the free world, where everyone should have the right to exist and thrive and participate in commerce. But for some reason, when it comes to cryptocurrency, we're applying a very different type of standard and logic to public policy. However, I do believe we have a very strong rule of law, which is also important to businesses. You don't it's not just having good laws and regulations. You also have to have a strong rule of law for businesses to be able to do well, which we do have that in the United States. And a lot of the political tax that are being put on the cryptocurrency space today are not holding up in the courts. So the courts really are our last bastion of hope. The regulators have really failed us. Congress has failed to pass any meaningful legislation to fix these issues. Although I think that's happening, but it just Congress takes a long time, and businesses can't just wait years and years and years for Congress to get a bill done. But I don't want to be critical of Congress's efforts because I do believe they are working hard. It's just it takes a long time. And so while Congress is figuring that out, while the regulators have been in an aggressive enforcement posture, the courts have come front and center. And I do believe a lot of this stuff is going to get worked out in the courts. Congress will catch up. We will get the legislation we need to provide certainty to businesses. But this is probably going to be a couple of years from now. So we still have a number of years where U.S. businesses can't really innovate. Meanwhile, that innovation is happening elsewhere. So I'm hopeful in the long run for the U.S., but my fear is that if we're building those rails, blockchain rails that we will use to facilitate business activity, if those are being built in other places. And I've had an incredible week here in the United Arab Emirates. I've met with so many businesses as well as regulatory bodies talking about the types of innovations that regulated companies are building. There's things of significant importance that are being built here. They'll be built here, they'll be regulated by different authorities and in the UAE, and the UAE is going to benefit from that. Um, so, if all of the infrastructure is built elsewhere, bringing that back to the United States, you know, it's going to limit, um, I think, the potential for the U.S.'s leadership in the digital economy in the long term.
And do you think this situation may change with the elections in the US?
It could. It really could. So it is an election year. So um, we have we have elections every 2 years, but every 4 years there's a presidential election. So this is a major election. We could have a whole new president come in. I don't think anything could be worse than President Biden. This administration has been absolutely devastating for the digital asset space. So if he loses, literally probably anybody else would be better than where we are today. And then we do have one presidential candidate, Robert Kennedy Jr., who's running on a very aggressive pro Bitcoin and blockchain agenda. And if he were to come into office, it would be the things that he's put forward would be a total game changer. But also the landscape in Congress. So there's a number of Senate seats that are up for election, and then all House seats, all 435 House seats, are up for reelection every 2 years. So there's some really interesting things that could happen in Congress that could give us a more favorable policy environment as well.
And obviously, as well, another recent news that Uniswap, the biggest decentralized exchange, got notice from the CSC. So how do you see the involvement with that situation, and whether it will prevent other decentralized companies, exchanges, apps to operate in the US?
Yeah, no, you're absolutely right. Uniswap reportedly has been served a Wells notice, which means enforcement is imminent from the Securities and Exchange Commission. So until we actually see the enforcement action, we don't know exactly what the alleged charges or activity is that's coming under scrutiny. But it is clear that the SEC is focused on DeFi, particularly the DeFi exchanges. And if the DeFi ecosystem as we know it today is all looped into the securities framework, there's a lot of different companies, projects, protocols that wouldn't be able to operate in that type of regulatory environment, which would just kill off the innovation. So the DeFi space is very much in a precarious situation in the US, and that's why a lot of major DeFi activity has already moved out of the United States, and most DeFi projects geofence don't allow Americans to access those products today.
What do you do from your side as the Digital Chamber of Commerce to oppose legislation to educate regulators somehow?
So when it comes to the enforcement actions, and there's been a lot of enforcement actions from the Securities and Exchange Commission on blockchain businesses, we've participated in many through filing amicus briefs. So we're involved in the court process, providing information to the courts about how the laws are being applied to this technology. And one of the things that the courts are very sensitive to is the courts typically don't want to set new legal precedent, particularly if Congress is currently working on that. So in most of our amicus briefs, we have stated that this particular issue in front of the court is also the exact same conversation Congress is having, and here's all the legislation that applies to this, and encourage the courts to allow Congress to do their job and not setting those precedent in the courts themselves. And so far, all of the courts have upheld that request from us. So we are seeing good outcomes in a lot of the litigation between the SEC and the industry and the courts, and we're expecting to spend a lot more time in the legal field as opposed to working directly with the regulator given the current environment.
And well, we see this year the approval of Bitcoin spot ETFs, as well as last week the approval by Hong Kong of Bitcoin and Ethereum spot ETFs. So how will it impact the investments coming into cryptocurrency, and how will it impact the perception of the investment?
Well, I think having spot Bitcoin ETFs as well as other spot crypto ETFs that may come in the future really gives a stamp of approval that this is real technology. There's been a lot of criticism, skepticism about the use, the purpose, is technology useful for anything at all. So having a regulated product like an exchange traded product does a lot just to signal that this is an important technology that's here to stay. But it's also bringing in a lot of institutional funds. So we're seeing record inflows into the US spot Bitcoin ETFs from institutions. We're seeing multi-billion dollars of institutional money flowing into Bitcoin today. Having institutions participating directly in the Bitcoin market is important for long-term adoption. So it's an extremely bullish signal, and it opens up a new access point. So before we had spot Bitcoin ETFs, if an investor wanted to invest in Bitcoin, they had to navigate that on their own. You have to go buy directly from a cryptocurrency exchange or another type of outfit that is selling crypto. A lot of investors want to invest through their financial advisors, through the brokerage, how they handle probably most of their investments. So it unlocked a new access point for investors to have access to a cryptocurrency product.
And for how long do you think these institutional investors will invest into crypto? Whether they will withdraw their sell their crypto assets when the bull market ends, or do you think they will still continue to invest?
Well, I mean, it's hard to say what everyone's going to do, but I think the history of Bitcoin, again, like 12 out of the past 15 years, Bitcoin has been the best performing asset available in the market. I think one of the reasons why we're starting to see real interest in Bitcoin is because a lot of the geopolitical issues and risks that are happening around the world, where this is a non-correlated asset, and can be a flight to safety in a time of economic uncertainty. And it seems like the world is walking into even more economic uncertainty and all more geopolitical risk as things around the world continue to escalate. So I think there's going to be high demand into this asset class for the long term. Can investors use it for speculative purposes? Yes, they can. But we are seeing very strong conviction. There's over 85,000 Bitcoin wallets since that bought Bitcoin in 2013 and have been holding it ever since. So if you look at on-chain data of how cryptocurrency or Bitcoin's moving through wallets on-chain, we see data that shows very strong conviction from investors as long-term investors. So we're seeing that retrospectively, and history could be a guide for the future.
And how long do you think this bull market will last?
Yeah, so I mean, I would say we are in a bull market today. Bitcoin really works in a 4-year cycle that coincides with the halvings, and we just had the fourth halving. In history, over the past 3 halvings, the best time to own Bitcoin is 12 to 18 months after a halving. So I think 12 to 18 months, typically after the halving happens, is when you see the peak. Then after that, you see a correction. So I think we still have a while to go in this current 4-year cycle. But this cycle may look different than previous cycles because we now have the institutions directly in the market. So the type of volatility we've seen in previous cycles, it may level off some given we have deeper liquidity pools, and you have more inflows coming in.
And during your presentation, you shared the screen with the prediction of the Bitcoin price from it was some chart from the fund, and it was written $136,000. So is it the same for you? The expectation that Bitcoin will hit 136,000 all-time high during this bull market, or whether you have any price predictions?
So the charts that I shared in the presentation today are valuation models. So they are looking at different aspects to measure the network itself. We all know what the price is. That's what Bitcoin's trading in the market for. Today, at the time of our conversation, Bitcoin's trading for about $66,000. So we all know what the price is, but the question investors really should be asking themselves is, what is the value? How do we value this network? A historical trendline analysis of Bitcoin has Bitcoin valued at $106,000 today, and the stock to flow valuation model has Bitcoin valued at $100,000 today. So the models are telling us, based on different things that they're measuring in the network, what it should be worth. So according to these two valuation models, Bitcoin is currently undervalued.
And let's talk more about Ethereum. There are some talks that Ethereum spot ETF may be approved by HSBC as well, but currently the approval was delayed. So do you expect that this approval may be this year?
Uh, I don't have any type of information that anybody else doesn't have. These types of approvals are held very, very closely with the regulator. It would be inappropriate to share those with third parties. So the only person that really knows when the spot Ethereum ETF is going to get listed is Chairman Gensler. If we just look at what happened with the spot Bitcoin ETFs, it took 10 years to get those approved.
Yeah.
10 years. The SEC dragged its feet up until the last minute and was ultimately forced. They were forced to approve the spot Bitcoin ETFs because they lost a lawsuit. They were sued and they lost, and so they had to move forward. I just knowing how Chairman Gensler is running the SEC currently, I don't see him going down without a fight. He put up a huge fight just to get spot Bitcoin ETFs across the line. So
What were the reasons for that, in your opinion? Because before he was quite crypto friendly. He was at MIT talking about the blockchain technology and the future of crypto and its values, and currently he's so strict and tough on crypto.
this is where politics come in. Remember I was saying there's no like common sense or logic or reason. There is no common sense or logic or reason that we can apply to how Chairman Gensler is currently approaching the cryptocurrency space. It's, in my opinion, it's political, and I think that's inappropriate. The Securities and Exchange Commission should be uh, a non-biased, neutral regulator. Their job is not to pick the winners or the losers or have opinions that this product is a good type of product or it's a bad type of product. Their job is to make sure companies follow the disclosures. These are regulated products. They need to make sure businesses are doing what they're supposed to be doing to be offering products to the markets. And they're not supposed to weigh in on do they like it or do they not like it? Is it good or is it bad? And that's exactly what Chairman's doing. And I would say that undermines uh, everyone's confidence. It undermines the integrity of the regulatory agency itself. So this is political and it's inappropriate.
And as well, before in your previous interview on CNBC, you made quite a bold prediction that Bitcoin may hit $1 million by 2029. So can you tell more why do you think so? The explanation.
So that is what the stock to flow valuation model is showing and has been showing for quite some time that by 2029, the price of Bitcoin could be as high as $1 million a coin, which seems like a lot, but we just celebrated the fourth Bitcoin halving that happened just a couple of days ago. And at the time of the fourth Bitcoin halving, the price of Bitcoin was $63,000. The price of Bitcoin at the previous halving was $8,600. So just in a 4-year timeline, we saw, huge changes in the price of Bitcoin. High volatility, as Michael Thaler says, volatility is vitality. People think of volatility like it's a bad thing, but volatility in this case is a great thing because it's impacted the price in a positive way for Bitcoin. If you put Bitcoin on an S curve analysis, so we use S curves to measure technology adoption, and what an S curve says is the amount of time that it takes the technology to go from 1 to 10 years. 1 to 10% adoption is the same amount of time that it'll take to go from 10% to 90% adoption. So if you log Bitcoin on an S curve analysis, it has us at 90% adoption by 2029, which is when stock to flow has a value at $1 million. So if we reach 90% adoption of Bitcoin by 2029, $1 million price point is not out of bounds.
And in your opinion, what do we need to reach that percentage of adoption of 90% is basically mass adoption already.
Right. Well, I think we're certainly on the way, but I think one of the biggest risks to the mass adoption of this technology is bad regulation and policy, the political risks that are coming from political parties, as well as censorship of the networks. There are a lot of efforts and attempts by regulators and policymakers to try to censor open blockchain networks, and that's something the community needs to stand against, because if you take away one of the core functions of open blockchains, you really take away kind of the purpose and one of the key uses. So we want to make sure that open blockchains continue to be permissionless, that these are technologies that can give access to people all around the world. The promise of Bitcoin, the promise of cryptocurrency, and the promise of DeFi is bringing financial services to those that don't currently have access to it, and we need to keep it that way.
And as well, we see as well countries developing CBDCs. So how do you see the current state of CBDCs and how will they coexist with stablecoins and with Bitcoin and other cryptocurrencies?
Well, CBDCs are happening. There's, the majority of central banks around the world are already either experimenting or have deployed or in the process of building and releasing CBDCs out into the market. So these will happen. The first country to bring a CBDC to market, of course, is China. And I've taken a close look at the technology, and a better way to describe it would be a surveillance technology. They can see every single thing happening in those networks, exactly how the digital yuan is being used, who's using it, and for what purpose. I believe this is a technology that can be used to control an entire population. So the right to privacy is something that's so core to the United States. This is the constitutional right. And it's something we need to protect as we're going from the analog world to the digital world. We need to ensure that our right to privacy is protected and our right to free speech. At the end of the day, open source cryptocurrencies is just software language, it's code. Code is a language, and language is protected by the Constitution as well. So any attack on Bitcoin and open source, any type of open source cryptocurrency, is an attack on our right to free speech and our right to privacy. And CBDCs absolutely could threaten that.
Yeah, I agree with you. It's quite a fight for freedom, and hope we will be able to win this fight and give back power to ordinary people and be able to use this decentralized technology.
Yeah, and that's really where I've dedicated my career, and we'll never give up in that fight.
Yeah, so thank you for sharing your expertise with us. Thank you for the great conversation.
Great to be here. Thanks, Anna.